Whitney here. Welcome to the Passive Investing Made Simple show. I'm your host, Whitney Elkins-Hutten, Director of Investor Education here at passiveinvesting.com. And I'm excited that you've joined me today. We do this webinar live every Tuesday to help you learn the ins and outs of passive real estate so you can build confidence on your journey towards financial freedom. Now, if you haven't done so already, make sure to check out passiveinvestingwithwhitney.com. There, I've got some free goodies for you, but also you can get access to my calendar. We can talk all things passive real estate, answer your burning questions there, especially in this tumultuous market that we've been in. Also, you can see our open deals there at passiveinvestingwithwhitney.com. Now, today we're going to focus on accredited investor FAQs, frequently asked questions. Now, I like doing this webinar periodically, like about once a year, because as we go through different market changes, the questions do change. What is burning on accredited investors' minds as they're looking at adding additional investments, or maybe even just starting off in passive real estate in general? Now, if this is the first time you and I are meeting, welcome. This is, if you're looking at this webinar on YouTube, you're seeing some pictures of my family here. This is the whole reason why I invest in real estate, is so I can spend more time in travel with my crazy crew. And these are just a couple of the fun adventures we were able to have this past summer. But for everybody, their journey is different of why they are, scaling their real estate portfolio, also scaling their passive investments. But I can tell you one thing. On my journey of scaling my real estate portfolio, I started off in fix and flipping and house hacking, then grew a portfolio in single family rentals, and then transitioned into multifamily, and then scaled in a GP partnership. All of those things together total up to some pretty big numbers. Over 6,500 multifamily units, 2,200 self-storage, and 15 express car washes. But they all are driving towards one result, which is freedom. And that is not necessarily freedom sitting on the beach, drinking Mai Tais and riding off into the sunset and not doing anything, but having freedom and choice and control on how you spend your time. And for me, I love spending it here with you, our investors, helping you understand passive real estate better, what's happening in the market, gaining more clarity here as you're, trying to hit your immediate passive real estate goals, but also transitioning your portfolio for the future. And we can actually help you do that here at passiveinvesting.com. We have some strong metrics to share with you. Over 300 million deployed through our rehab wallet lending arm, 1.4 billion assets under management, and over 51 million in investor distributions made. Now, as I mentioned before, this is your invitation to join. I'll also put up here at the end of the show, but join our passive investing club. If you'd like to get free access to our educational masterclasses and boot camps, our priority access to our deals, or to hop on a one-on-one call to discuss your investing goals, I'm here for you. So make sure to check that out at passiveinvestingwithwhitney.com. And also, if you're looking for a blueprint in order to scale your portfolio, making sure that you have all of those money leaks plugged and that you know how to not only create money and grow it through investment, but also keep it and pass it on, check out Money for Tomorrow, my book with bigger pockets. You can also scan the QR code here. You can find it on biggerpockets.com, as well as you can find it on Amazon. Now let's dive in today. I have 8 burning frequently asked questions that investors generally ask. Now, this is, like I said, I'm not just trying to regurgitate to you what, a lot of investors, what they ask as far as like due diligence questions. Okay. So this isn't necessarily your due diligence checklist, but moreover, to help you think through some critical areas that if you were to get on a call with a operator, what are some of those kind of like 201 layer questions that you should be asking not only them, but yourself? All right. Now, as with anything, the webinars we do here are not financial advice, legal advice, or tax advice. Okay, so as you have these conversations with your operators or even with our team here at passiveinvesting.com, make sure to take that information that you glean from these conversations and converse with your investment team before making any decision. All right, now Warren Buffett's rule number 1 is don't lose money. And rule number 2 is see rule number 1. And what is he trying to tell us here? And that is focus on capital preservation first. Now that, may be a little bit difficult as an investor because you first have to understand what phase of investing you're in. Are you in the accumulation phase or are you more in the cash flow phase of investing? But regardless of whatever phase you're in, you should go into any investment with capital preservation in mind. So the FAQ that we normally get here at passiveinvesting.com is, how does passiveinvesting.com approach capital preservation? Now, I have a whole laundry list of answers for this question, but if I could give you one thing, it is understanding what market are you going into? Like if you're buying a piece of real estate, it can't be moved. You can't like pick it up and move it. It's not like a business. Like if I'm not getting my customer traction on one side of town, I can actually pick up my business and move it to another side of town or move it to an online setting perhaps. But with a piece of real estate, you can't move it. And so really, one of the biggest things here that we do at passiveinvesting.com is to take a look at the market, really dive in there. What are we going into? Is the population growing? Income's growing? Jobs growing? Jobs are diversified. What does the tax situation look like in this particular market? What does the insurance situation look like in this particular market? Okay, so we're trying to stack as many investing cards in our favor. Now, we certainly want to understand from a capital preservation standpoint when we're talking about the asset, like is the asset class, the right asset class, the right strategy, business strategy, in the right phase of the market with the right debt on it. So there's a lot of other players when it comes to capital preservation. But if I could impart one key thing here is making sure that you're in the right market, even on the right side of the town. And if you're investing in a cash flowing business like an express car wash, are you on the right side of the street in the right side of town with good traffic counts that can make a right-hand turn into that location? Question number 2, asset class. Now, I already alluded to this when we were discussing capital preservation, but even right now, what asset classes, are poised, to do well for 2025? Well, we not only want to understand what the operator is looking forward to investing in, but we also want to understand what's currently in their portfolio. And the reason why we want to understand what's currently in the operator's portfolio is, one, how are things doing? Okay, how's their portfolio made up? Have they adjusted what they're investing in based on market pressures? And then also, what is their background and experience there? So I'll tell you a little bit of a story. I invested in an asset with an operator who was amazing at multifamily. And then all of a sudden they did a ground up development for a medical office. And I'm like, okay, like, they made a really strong business case. I invested in it. And guess what? Not only between the asset class, there were some translatable skills there, but also we hit a very tough time called COVID. And that medical office sold below value. And so not all our investors got their money back. Okay. So one, we want to understand the asset classes. What is that operator proficient in? Okay. What do they have a track record in? What are they putting their time and attention in? But also we want to understand where the portfolio is going for the next year. Now at passiveinvesting.com, we really love we're looking forward to getting, expanding our express car wash reach, as well as our multifamily reach for the next year. We still love self-storage, as an option. It's having its own market challenges because asset classes cycle at different times from the general market. Okay, just because Multifamily might be, hitting its, issues over the past couple of years. Self-storage wasn't too far behind it in a lot of cases. All right. And then we also love real estate debt. Okay. We, depending on what part of the United States, some parts of the United States, as we've been discussing about markets, are hitting hypersupply. Other parts of the United States have gone into that recessionary part or, the environment or moving towards recovery. Okay. That whole side of the market paradigm, okay, that hypersupply into like recessionary environment, credit gets sucked out. And so this is making debt a great opportunity investment right now in the market. All right, exit strategy and liquidity. Now, if you are a seasoned passive investor, you understand that passive investments generally are an illiquid asset. Okay, but this is a question that we want to ask our operators. What is the expected exit strategy? And how accessible is my capital if I need it before the planned exit? Okay, so when we talk about exit strategy, it's not your exit strategy as the investor, it's the exit strategy for the asset. You need to fully understand that, because when you peel back that question, you're going to get better clarity of like, what's the actual business plan of the asset? Okay, if you're thinking, I'm going to get my money back in 2 years, and the exit strategy that operator tells you that, hey, we're hopeful to sell in 3, but be prepared to for us to, ride out the asset for 5 to 7 years, then, you're not aligned on, if that investment should belong in your portfolio. Okay. Whereas if you're, investing in an asset and you're just like, hey, maybe, I would love to have my cash back sooner, but I'm okay with the 5 to 7 year timeline. Now you guys are more aligned. You and the operator are more aligned on the actual strategy and your liquidity timeline in the asset. Okay, so you really have to understand that piece. Okay, now the second half of this question really is geared as, okay, if I really needed to get at my money, like, do I have a way of getting at my money? Now, this is where equity assets generally are illiquid assets. Okay, debt assets generally have some sort of liquidity to them, but maybe there is a lockup period. For us on our debt assets, we for investments below a certain dollar amount, we have 0 lockup periods, but over a certain dollar amount invested, there may be some lockup periods. We try to keep them extremely short. I know other debt funds, their lockup periods are 1 year or 3 years. Now, back to the equity side, the reason why the capital is invested in illiquid for as long as it is because we're partners, right? The operator and the limited partner, they're partners. You guys are trying to steer an asset to profitability, okay? Now, there may be some planned provisions in the PPM, but make sure that you read your PPM very closely and fully understand, one, are those provisions there for you to exit an asset? And if 2, under what conditions can those provisions be triggered? At the end of the day, in passive investing, I typically, coach my investors, make sure that your investment timeline either matches the business plan or exceeds the business plan timeline, just in case you hit a bumpy market. All right, alignment of interest. Now, we want to understand the alignment of interest. I think, some investors get a little confused by this. I think initially a newer passive investor might say, hey, alignment of interest is how much capital did you put into the deal? If that's the case, we're aligned, right? You have your money, there in the deal. But as you become more seasoned and you start reading the legal, documentation, really alignment is demonstrated in the waterfall structure. So how is the typical waterfall for your investment structure? And are there mechanisms in place to align your financial interests with those of the investor? Okay, so it's really the first half of that question that I want to draw your attention to. Make sure that you look at the PPM, that you're fully reading it. Okay, so there's a couple of things here that I want to point out. 1, yes, are they making a capital investment? Cool. But 2, you want to understand what is the different layers of the money? Where does the general partner sit? And who gets paid what and when? Also, do they do a GP catch-up? Okay, if they do a GP catch-up, that is a completely valid, provision to put into a PPM. However, if an operator does that, we at Passive Investing do not believe in that. We want to be aligned with our investors. Why is it in there? Dig further, okay? Because maybe you're not aligned don't have an alignment of interest. All right, transparency and communication, okay? Now this we can get at a few different ways, but I don't think investors ask operators this enough. And that is, what regular updates can I, expect to get, and what type of access of information will I have as an investor? Okay, so goes beyond like, will I get an email, once a week and a K1 at the end of the year? You want to have a good handle for the in-depth information that operator is going to give you. Are they treating you as, kind of like just the bank in a way, and just sending you brief like little updates and saying, thank you, but we got this? Or are they actually treating you as a partner and sending you more detailed updates to where you can ask intelligent questions if you so choose? Now, I can flip this on its head. You as a limited partner investor should be reading the updates in all the quarterly financials, okay? Right? It shouldn't be a set it and forget it. That is one of the big kind of stumbling blocks, obstacles that I see passive investors have, is that they go into a passive investment and they just totally kind of like brush their hands and are like, hey, I'm going to wake up in 5 years with a check in my bank account because we all made money. Okay, so make sure that you understand what type of updates and communication that you're going to get, and then also set some time aside every month, every quarter to read all that communication, stay abreast of your investments. All right, risk mitigation. This is another frequently asked question when I'm on a phone call with an investor, is what are the specific risk mitigation strategies you implement, and how do you monitor and adjust for risk? Now, our due diligence that we do on our assets is pretty detailed, okay? So we're looking at not only the physical aspects, trying to mitigate everything physically on that particular building, we're also trying to, protect the income of the asset. Can we, if it's a multifamily building, can we raise rents? We're delving into CoStar data to make sure that, our assumptions are all aligned. We're also diving into the expenses really deep, making sure that we're putting in conservative guesstimates for expense increases. All right. So we're looking at the income, we're looking at expenses, we're looking at various market forces. We're also looking at supply demand in that particular area. And that goes for any investment, whether it's multifamily, where it's self-storage, whether it's, express car washes and actual businesses. Here's the thing. You can do all the risk mitigation that you possibly can. All right. But that doesn't mean that you have eliminated all risk. Market forces still happen. So now the question becomes, how do you as the operator stay abreast on market changes? Are you doing like what we do? We send our assets to what we call a broker's price opinion every year. So we actually know year to year what kind of valuation we can get for an asset. All right. If we're trending the right direction, cool. We're going to continue to navigate the business plan and optimize it as much as we possibly can. If we're trending in a negative direction, all right, we need to preserve investor capital right now, and let's figure out a plan for that. Okay. And so you want to be partnered with an operator that is, got their finger on the pulse. Okay. Now there's so many different other risk mitigation strategies. I would say one that's very important right now, have the right insurance as well. Now I put this last, tax benefits and strategies, because this is often the first question that I get from an investor. It might not be the first, but maybe the second question. Oftentimes, the first question is, what kind of returns do you offer? What are the tax benefits? And as you can see, I wanted to put this last in our conversation today because there's so many other frequently asked questions that you should be targeting if you're not already in your conversation with an operator. Tax benefits is what I like to call the icing on the cake. How will my investment provide tax benefits, such as depreciation and cost segregation, and how do you approach tax strategy for optimal after-tax returns? Okay, so if you're in an equity investment, you could probably expect the operator to pass through some of those tax benefits. One of those being accelerated depreciation through the use of a cost segregation analysis. All right, but also how are they taking advantage of bonus depreciation and adding that in? Okay, how are they documenting all of that on the K-1? Okay, that can be, a good piece of information for you. Now, here's the rub. An operator cannot give tax advice, okay, because they don't know the intimate details of your personal tax situation. So you got to take that information back to your CPA to understand how that asset fits into your overall tax strategy and plan for your after-tax return. All right. Now, there's a lot more questions that we can dive in here, but I wanted to give you the top 8 questions to, touch on the major basis, and if you don't already have these in your due diligence information, you should, but these are the top FAQs that we get from our investors. All right. Oh, one more, safeguard against fraud. This is one that I think investors should ask really upfront. One, because if you have a nefarious operator, they're not going to give you the information that you're desiring. Okay. So number one is all about asking them, what are their safeguards and controls and systems in place to prevent fraud and mismanagement? And then the follow-up question here is, can I take a look at some of these? All right. How does this play out? Okay. And that follow-up question is where if you have somebody that your alarm bells are already going off, and you're just like, oh, I don't know how, how they do all this, or is this somebody I really know, love, and trust? Okay. That second part of the question will probably suss that out. But here we want to make sure that our operators, what we do, we have an investor portal. So when you're in communication with us, we're not sending you tax information or your social securities through email. It is, all of our investors access the portal. It's all done through a secured environment. Okay. Also, before you even wire the check, you want to make sure, how is that the banking information being distributed? Okay, is it being distributed in a signed secured document, or is there some other mechanism? Or are you going to get a text with a PDF? Okay, I wouldn't, if you get a text with a PDF saying, here's the wiring information, I don't know, that would make me a little bit, leery. I have seen that before too. But you want to understand what that operator has in place from a fraud mitigation and standpoint. And then as far as mismanagement, okay, of funds, that is something, this circles back to what information are you getting from the operator on a regular basis to fully understand how are they executing on the business plan, but also taking a look at the detailed financials every quarter on that particular asset. All right, guys. If you're here live, don't go anywhere. We're about to start the Ask Me Anything part of our show. If you are still listening on your favorite podcast player of choice, make sure to go to passiveinvestingwithwhitney.com to access free educational masterclasses and boot camps, see our open deals, and hop on the phone with me. If you're here live, don't go anywhere.